So asset classes wise, so in our business, right, we started multifamily, started doing some, we've been involved in a lot of asset classes, but ultimately we've really settled on the industrial space. So like, what would you say if you're pitching industrial, right? Like,
hmm
okay, this is why I like industrial. Let's compare it to multifamily or even some other asset classes. What do you think the key differences are and why you prefer it?
So I always joke you can't warehouse from home. Let's put multifamily, on a shelf for a second. But as it relates to other asset classes, what we do, you can't really replicate outside of the manufacturing facility, right? Like, office space, we're all now hybrid, right? Or we're all now on video calls. Even retail, e-commerce has really kind of changed that game. Yes, there's still a need for those assets, but not like there was pre-2020, pre-COVID. Um, why I think industrial is such a great place to invest is simply because you have a business that's dependent on the real estate. So in a lot of these situations, in some of the buildings that we've transacted on, these companies, they have to have the infrastructure. They have to have the air conditioning in the building. They have to have a huge power service. Maybe they have to have cranes. They have to have specialty pads, poured concrete for their machinery. So it's one of these things where if you invest in the right property, there's a great chance you have a captured tenant, right? Like these guys can't relocate to some place else.
So that's on top of that, right, is for me, when I think about it, I get asked that question, right? The key difference, someone asks, well, what's the difference between multifamily and industrial, right? Is one of the big differences is leasing,
hmm
right? So if you're looking at an apartment, if a unit goes vacant, right, you can put an ad up on your phone and it's much easier to find an apartment tenant. If for an industrial tenant, when the building goes vacant, it's a little bit more work, right? And it's going to take more work to get that space leased, more money, more time. But on the flip side of that, right, you lock them in for a 5, 10, 15-year lease. You once you get that locked in, you're pretty much sitting back and not doing anything.
Well, and to that, the cream on the top is triple net lease, right? So multifamily,
Hallelujah.
you're constantly battling your operating expenses, right? It's like, how do we get these to come down? Can we, start billing separately, metering separately for certain utilities, or can we drop, management costs, and what can we do? A triple net lease is a beautiful thing because you pass all of that directly through to the tenant. Your taxes go up, the tenant pays higher taxes, snowplow goes up this year or comes down, they see that benefit as well. So yeah, the triple net lease structure is a fantastic thing.
Yeah, you don't have to deal with the three T's of multifamily: the tenants, the termites, and the toilets.
Mhm.
It's God
And
bless the
and in
triple
a
net
lot of
lease.
these cases, as far as maintenance responsibilities go, a lot of these companies they treat the facility as it's their own, right? And what I mean by that is like typically a manufacturing company, it has a maintenance person, right? That's already taking care of maybe some of the machinery or, cleaning up after, a job gets done. And a lot of times those employees will also take care of general maintenance around the building. Especially within Southeastern Wisconsin, the mindset is often we don't want to be an inconvenience for anybody. Why don't we just take care of it ourselves? So you'll see that, maintenance individual go out and, they'll replace a light bulb or they'll fix the toilet or something like that, which, leaves you guys to play golf and hang out all
Well, I think operationally too, right? If you look at some high level numbers like apartments, rule of thumb, a lot of times is every 100 units, you might have 2 employees, right? To manage the property, oversee everything. Where I think, let's say 100 apartments equals a $10 million property.
Mhm.
Whereas with industrial, right, I've heard people that have $100 million portfolios of whether it's industrial to triple net in general, and might only have 1 or 2 people that are overseeing that portfolio. It's like, so you look at it from that perspective, can be a much more scalable model. Of course, apartments, you can kill it too and build out economies of scale there too. But I think you look at it from that perspective, you can really build this massive empire of properties and really have a lean staff that's managing these properties efficiently.
100%.
I think the value add component's different too in multifamily. A lot of times the value add is in the lease, and particularly you can find win-win scenarios with the sale leaseback. Can you give the listeners a synopsis of what a sale leaseback is?
Sure. So a sale leaseback is a transaction, very straightforward. The name kind of describes it. So sale leaseback transaction, essentially we take a business which owns its real estate and we work out terms for them to sell that real estate, but then lease it back post closing. Now that may seem like kind of an odd concept, but it's a great tool to use depending on the situation the owner is in. For example, if they let's say need some cash for one reason or another. So I often see it as a way for creative financing. The business that's in there for one reason or another, they don't want to go to a bank. Rather, they've already tapped their lines of credit, or they're trying to acquire another business or something like that. They need some creative financing. We can structure a sale leaseback. We can help them harvest, let's say, a few $1,000,000 from their real estate. They don't have to move. They don't have to change their daily operations. They just get all the benefit of the cash while continuing to lease the real estate. In other times, it makes a lot of sense if there's going to maybe be a transition of ownership. We can sometimes help a buyer and seller fund the acquisition through a sale leaseback strategy. So it's a kind of a Swiss Army knife of a deal. But the benefit to the investor is if you go out and acquire a sale leaseback, you have somebody who, one, has been operating in the business or in the building for a number of years. They likely have some pride of ownership, so again, with like the maintenance individual, they'll often continue taking care of maintenance responsibilities. But two, you have zero vacancy, right? There is no downtime. You're not going to miss rent payments for like 6 months trying to get that set up. And so from day one, you're, cash flowing, and you typically have a lease that's structured 3 years, 5 years, 20 years in certain situations. And so your level of risk drops significantly.